Good day. The date today is 12th January 2023. It's a Thursday and the time is 2:38 p.m. Welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. A disclaimer before I start that whatever I share here is purely for information and education. Should you take action following my presentation, please first consult a financial planner or a licensed broker. The stock today that I'm going to analyze is one that I have done last week on the 6th of January, and the stock is Homer Ritz. It just happened that today it is triggered again. So meaning it's a good signal that since it happened, meaning Homer Ritz is actually uh, giving the signal that it is continuing with the trend and the momentum. All right. Uh, I'm not going to present the case all over again. What I'll do is I'll just go through with the um, fundamentals, and then I will show the previous video I've made to argue my case. All right. So let's look at the fundamental for the moment. Okay, based on magic formula, if you add the operating earning yield and the ROIC, this home rates will give you about 35.3 percent, which is far more exceeding than the 15% which I will normally accept for magic formula. All right. The enterprise value to EBITDA, which is the acquirer's multiple, is 1.24, very low. So you are probably buying the Homerites at a very big discount or at a very good valuation to the market price. As a relative comparison, normally the magic formula you use the EBIT to enterprise, and you can see that actually the enterprise value to EBIT and the enterprise value to EBITDA uh, is quite close to one another. All right, so the correlation is still good. It has a PE ratio of 5.7. In this case, magic formula normally has the condition of PE between 5 to 10. Okay, this is within that range. And the earning yield is just used as a relative comparison to the operating earning yield, which is also close, 17.7 against 17.6. All right. Growth PEG ratio, price earning to growth ratio of 0.08, okay, below 1. So there is still a lot of growth factor uh, that is can be found in Homerites. There is a dividend yield 4%, uh, positive free cash flow of 45 million, good Poitrovsky F score of 7, okay, which is the what we call required minimum, 7 to anything between 7 9 is excellent. All right. The Altman Z score, which is the bankruptcy score, very high compared to 2.5, which is the norm. So uh, it has lots of money, so there is no fear of bankruptcy in the next coming 2 years. Okay, market cap 250 million. Normally, for Magic Formula, we look at stock that has 50 million to 2 billion. All right, market cap has a good current ratio of 10.6. All right, plenty of cash. That means net debt of minus 148 million, meaning this is a net cash company, and net debt to EBITDA is minus 2.79. Okay, what it means is that it has more money than it need to be utilized to even service its debt. Okay, I will leave it to that. I will think that Homerit is basically a very good investment grade stock, and just listen to my previous other presentation and analysis, and you decide if Homeris is a good stock for you for to consider. All right. If you think my trading idea today on Homeris is informational and educational, please like, share, and subscribe. All right, if you share and subscribe, it helps the channel grow, and it also allow others who may be your friends, family, or other fellow investors who are also wanting to hear about some good trading idea, and they may be interested to watch it too. Thank you for listening and also your time. Have a good day, and bye bye. Okay, the date today is 6th of January 2023. It's a Friday. It's a weekend. Not a weekend, it's the last day of trading and going into a weekend. I made a mistake yesterday, so I'm correcting myself now. I thought yesterday was Friday, but it was only Thursday. So only today is Friday. So it's a Friday, the 6th of January 23. And the time now is 12:54. I welcome you to purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. I have to put in a disclaimer though that whatever I share here is purely for information and education. Should you decide to take action after my presentation, first please consult a financial planner or a licensed broker. The stock in focus today is an interesting one. I would say that this stock is totally investment grade fundamental stock. All right, and this stock I'm talking about is Homer REITs, stock code 5160. Homer REITs, wood-based, lumber-based counter, and the stock code is 5160. Okay, let's get to the fundamental of it straight away. Okay, first we calculate the intrinsic value. The intrinsic value of Homer REITs is actually using the enterprise value divided by the total common share outstanding, and the enterprise value is 100.22 million divided by the total shares, common shares outstanding is 463.24. Okay, and the intrinsic value is 22 cent. 22 cent. The current market price is trading at 55 cents. So looks like we are paying a premium for uh, the current market price should we decide to buy one. And the difference between the intrinsic value and the current market price is 22 cent minus 0.55, which is about 33 cent. So we will be paying a 33 cent differential. All right, premium differential. So the question is it still worth to pay this premium? To answer that, we have to look at the operating earning yields percentage. Okay, it's refreshing. Give me a moment. Okay, so the operating earning yield differential percentage is 17.7%. So there is no issue of Homerids covering the premium differential in the first place. Okay, uh, and it has an operating margin of about 19%. And if we work out what we call the magic formula, that is the ROIC divided by the operating earning yield percentage, it is about 1. All right. So not only it will cover the differential, but there is also what I call hidden latent value in this particular stock. All right. If you use ROIC divided by the operating earning yield, and if it gets to the whole number of 1, meaning that this particular stock has plenty of latent or hidden value in it. All right. It has a PE ratio of 5.8, very low PE ratio, despite the fact that you are already paying a premium and still you are buying at a very low PE ratio of just about 5.8. All right. Uh, Price earning ratio forward 6.94, meaning that going forward, actually, you can expect the price to ascend higher. All right. This is just a forecast, but what it means is that it is expected to get higher, most likely by what we call incremental earning per share. Okay, as the earning per share goes, uh, then the price earning ratio forward also goes up. Okay, and this is what I like most. The enterprise value to EBITDA ratio, that is what I call the acquirer's multiple, is only 1.24. It will be perfect if it is 1. Okay. Uh, Look at the magic formula. ROIC divided by the operating yield, earning yield is near to 1. Enterprise value also near to 1. All right. Although it's only 1.24. So what it is trying to tell us is basically this particular stock, even at a price of 55 cent, is charged with lots of value imbibed in it. All right, pays a dividend of 4%, and although the payout ratio is quite low for dividend, 20 or 21%, at least it still pay a dividend. But I think we look towards more capital gain in this case for this particular stock. Free cash flow, trailing 12 month, 44.9 million. Okay, positive free cash flow, and a free cash flow margin of 18%. All right. So for expansion, for paying dividend, this shouldn't be a problem at all. All right. Net debt minus 147.6, or about minus 148 million, meaning This is a very strong net cash company, no bad debt. The F score, or what I call the efficiency, or the management efficiency score, on profit and ability to manage a company, which is also known as the F score, is 7. Good. Anything 7 and above is perfect. The Altman 8.69, the Z score, meaning it is guaranteed for the next 2 years this company will stay very stable. All right, no chance of it going bankrupt. All right, and the M score, uh, although it should be a negative 2.5, this is 0.19, meaning that actually it it most probably has quite a lot of accruals. Now we are just adjusting outward because Homerids for the last 2 to 3 years wasn't performing very well, so it is making a comeback. Okay, generally I would say that Homerids is a comeback counter. All right, not only recovery, not only going to perform well, but it is a comeback counter. All right, so I would say this is a good investment grade stock. Okay, and how about the sentiment wise? All right, in reality, actually, home rates has been not showing any good sentiment since last July, August. All right. Actually, I have already actually put some money into this stock and have waited for quite a while. But it's only now that I can see that the sentiment has returned purely because it has did a squeeze breakout today. All right. Here is the top: one resistance, two resistance, three resistance, and today there is a resistance breakout. All right. So this is a squeeze breakout entry strategy. On the trend side, no problem. There is a three higher lows, and more importantly, there is a golden crossover here, and not only a golden crossover, but a confirmation of two crossovers above the MA233 line, crossover by the MA21, and also crossover by the MA55, going above the MA233 line, and definitely confirmation of a trend. All right, and with the resistance breakout today. So it looks like the sentiment has returned. All right. So for momentum wise, uh, actually in September, this is the first time that the ROC uh, at parameter 55 days cross above or break out above the neutral zero line and has stayed above the zero line since and has never gone down. So momentum wise, since September, it has been gaining momentum, and you can see actually that the price action now is running above the MA21 line and also above the cloud. So trend and momentum confirm. Uh, Entry strategy confirms. Squeeze breakout on the resistance, and actually it is running on the Elio wave 3. Not only the microwave but also the macro wave, the bigger wave of 3. So looks like this is a promising counter, and I predict and forecast that it will probably reach the target price of 62 cent. All right, at the apex of wave 3, microwave 3. So if you buy at the price of 55 cent, which is the closing price at midday today, all right, and wait for it to reach the target of 62 cent with a cut loss of 52 cent, you will have a reward to risk ratio of 2.57 times. Okay, and what is more interesting is that it has a situation of what I call buyer's intact over here. All right, you can see actually volume has been quite consistent by the green bar, and today for the last 2 day you can see that actually there is actually a volume breakout above the MA 90 days, and also the price action breaks out above the MA 21. So all the parameters are pointing to positive sentiment, and I think this is one good stock for you to consider, even though over the Friday, which is over the coming weekend. All right. In any case, it's your decision. If you think what I present to you is informational and educational, may I request you to like, share, and subscribe if this trading idea is ideal for you too. All right. When you share and subscribe, it actually helps the channel to grow, and so also allow others or your friends and relatives who might be interested to watch this particular video too in YouTube. All right, kindly share, help me, support me, and thank you for listening, and also thank you for your time. Have a good coming weekend. Have a good day, and bye bye.